So far in this sort of mini course, I've kind of drilled in this area and that area and given you kind of the specific look down the alley of how this all comes together. Now I want to kind of zoom out and give you the big picture blueprint of how this truly all comes together, and especially how I'm going to teach it to you in a way that's going to make it very easy for you to understand exactly what you need to do, exactly what you need to sort of compile in order to put together a set of bulletproof books for property owners and flippers. So, the first thing, just to recap, I've explained to you previously why I think it's really important for accountants and bookkeepers to serve a niche like property owners and flippers. I explained this is a high demand and short supply area, and I explained why, because it's complex, and that means most people won't want to learn how to do it properly because that takes time and effort. Right? And I'm reminded of this quote from Jerry Rice where he said, "Today I will do what others won't, so tomorrow I can do what others can't." And that really speaks to quality of life. So many accountants and bookkeepers I talk to admit that they are working way too many hours, and it's really taking them away from quality time that they'd like to be spending with their family. And then even when they do get that kind of time, they're not present because their mind is so focused on all the things they have to do that they just can't keep up with. Why? Because, like I said, most accountants and bookkeepers are in a race to the bottom, serving niches that are in very mature markets, which just means there's a lot of people serving it, and it's, by and large, not that complex. It's the opposite of what you've got in front of you right here. So next I showed you how to get started, getting set up with bulletproof books for property owners and flippers specifically. And I showed you the secret to how to tie everything together, meaning that, everything gets tagged to a customer so that I can drill down and filter reports by customer. I can run a P&L by customer. I can drill into the balance sheet accounts for construction projects by customer, and so on and so forth. And now I want to give you the blueprint, pun in fact intended, right? Blueprint, get it? Construction. Anyway, really it's everything I've shown you already. But like I said, I want to zoom out so you can really get a bird's eye view of the entire system here with everything really that I've shown you. And so you can see how it all comes together and creates a set of bulletproof books for property owners and flippers. Okay, so let's again just go through quickly and recap in QuickBooks Online what we've got set up. The first thing is the chart of accounts, right? Before that, we went through the settings, right? And the most important area of the settings is in the expenses section. But as I said, you should go through everything and just understand what it does. Slow down enough to ask yourself, do I understand what this does? And if it doesn't, and you're in the course, you can ask me, right? But the main thing you need to do for sure is in the expenses settings, make sure these three items are toggled on, right? Absolutely must be done. Next, we can look at the chart of accounts, and the chart of accounts has a very specific structure. Again, we're using account numbers, and I'll review with you the template that you're going to have access to in the course that will make it really easy for you to take a blank QBO company, or almost blank, and just import the accounts that you need, right? But the main thing is for the construction, it's one set of accounts for all the properties. You saw already how you can drill in to get focused on the activity for a specific property within any of these accounts, and that goes back to the secret weapon, which is that everything gets tied to a customer. We're going to do the same thing for the rental properties. I'm going to show you an example of what that looks like when we're using an invoice to capture rents, right? So under rental properties, we have each property, and each property needs to have improvements. So the improvements to property is kind of like your ongoing construction cost for a property that you own and plan to keep, right? So in other words, when I do major improvements, which generally speaking is defined as something that either increases the value or the life of the asset. So, if there's a distinction there between simple repairs and maintenance and doing some, fixing some plumbing problem versus doing major construction that actually will increase the life of the property or the asset. Right? So we've got Main Street, we've got improvements, I've got the original cost, and it's broken up between land and building. This is how we set up a rental property on the balance sheet, right? Going down the line, we have the liability for the tenant security deposits. We have to track mortgages separately for both construction and rental, right? Those always need to be in their own separate accounts. And on down the line, then we have the income section. We'll have the rental property income, right? Security deposits withheld when somebody moves out and we keep some of their security deposit. That's income, right? And we call that security deposits withheld. That's about it. That's the chart of accounts setup, right? Then we have the products and services, which are broken up into two major categories, right? If I go here to manage categories, I didn't show you this earlier, but we have two: construction items and rental items. Diving back in over here, you'll see it all laid out. Most of this is construction items. This is where we track all the details of the construction work that was done. And by the way, clients are going to want this detail, especially if they're in the habit of buying and flipping properties, because when they do any kind of an estimate, they're going to want to look at previous similar jobs to understand, what this job is going to look like, so they can plan and budget. And especially if they're bringing in like investors, which they often do, they're going to want to be able to show that to their investors. The rental item section, much simpler. We have late fees, monthly rent, and security deposit. Okay, then very quickly back to our reports. Let's run our balance sheet. I'm just going to run this by all dates so that it includes my future stuff. Okay, and that's where you can see this all zeroes out on the balance sheet once we've sold the property. If I drill into here, and in this case I don't need to filter it for the property because I only have the one, but again, if I wanted to, I just go to Customize, Filter, Customer, 123 Desert Plains Road, and run. And it won't look much different now, but if there were more properties activity in here, it would now just be filtered down, chiseled down to just show that. And you can see how each of these sections zeroes out perfectly once I've recorded the journal entry for the sale of the property. Now, really quick on the rental. I haven't shown you much about the rental property, but I'll show you very quickly really what's at the core of it. With rentals, we're going to do an invoice. Even if we're not going to send the invoice to the tenant, which we probably won't. I've lived in one apartment in my life where the landlord actually sent you an invoice, which I thought was cool because it was a nice reminder that I needed to pay my rent, right? But most don't. So I would fill this out, and you're looking at the new invoice module for QuickBooks Online. So we're showing you the latest and greatest here, because even though you have the choice still, that's only going to be true for so long. Here, I would just say, here's the monthly rent, right? And let's say the rent was $1,500, right? So you put this in here and fill it out. Once I save this, we're going to basically be tagging this $1,500 of income as rental income. That's how this item is mapped. You'll learn that, of course, in the course. And that's it. And then, of course, expenses work the same way, tagging it to the property as I showed you with construction. It's just most of that stuff on the rental properties are going to go to actual expense accounts as opposed to construction in progress. But you're still using an expense transaction, which I'll pull up real quick. And yeah, we'll leave without saving. So new expense. And if Desert Plains Road was a rental property that I was keeping, then I would pay for the expense, whatever it might be. Right, I have BP Plumbing. Okay, let's say I'm putting it on my credit card. You'll find the appropriate category account to code this to, and then most importantly, you'll choose the property. And if you wanted to track these kind of expenses by unit, as I mentioned earlier, for a rental property, you'll have a sub-customer in the form of each unit. You can do that. In the course, I talk about why or why not that might be a good idea, and I also will suggest another option for tracking all the maintenance costs for each unit in a separate group of customers, so that even though you're going to make the tenants actually inactive as they move out, in the other group you'll have a permanent record for each unit of what kind of costs. And that can be valuable information for the property owner to know, where they've spent a lot of money on, let's say, one particular unit and what for, right? Especially if you see that it's ongoing, it could suggest a bigger picture problem that can be addressed to save them money in the long run. So that's just a very quick peek at what the rental property model is going to look like. And then that's how you'll get a P&L for the rental property, is you'll be able to run a P&L and filter it for that customer. I don't have transactions in this data yet to show you on that, but I'm sure you can figure out the concept, right? You run a report, you run a profit and loss, and I can customize and filter by customer. Choose Desert Plains Road and run. I don't think there's anything in here yet that would go on this. Actually, there is, because I ran this for all dates, and I do have the gain or loss on sale from recording that. And that, of course, does post to an income account. And I have a few other expenses that were incurred during the sale. So I take that back. So now you can see a little bit of what it looks like. This is for a construction property. For a rental property, it's going to be the same thing, the same process for getting here. You're just going to see things in different accounts, because you're going to see rental income and rental related expenses. And that is about it. In the next video, I'm going to talk a little bit with you about something that I've touched on, the fact that I see this as a tremendous opportunity for accountants and bookkeepers in terms of the accounting specific implications, the supply and demand stuff. But in the next video, I want to talk in a little bit more detail where I see even beyond that a bigger picture opportunity, and why I think it's a really good idea for an accountant or bookkeeper to get involved in real estate in general as a niche. And it has to do with the real estate markets and other opportunities that will arise as a sort of byproduct of all of this. So stay tuned, look out for that next video coming out in the next day or two. As always, I hope you enjoyed this video. I hope you learned something. If you need to go back, all the previous videos are now available. You can watch them and recap, take notes. Hopefully you've done your homework and uploaded screenshots so that I can take a look and comment on them. And that way, as I've said, you'll be the most prepared you could possibly be. Once this course launches, you'll really have a thorough grasp of what's going on and what I'm teaching you in much, much more thorough detail in that course.